Hi, I'm Karthik Kumar, Fund Manager at Axis Mutual Fund. I have 15 years of experience in managing quantitative strategies for the Indian and global markets. I'm here today to talk about our offering Axis Quant Fund. Axis Quant Fund is an offering that leverages on the power of data and mathematical models to identify stock and sector opportunities in the market. In this era of abundant data and an ever-increasing universe of stocks thanks to IPOs, a quantitative approach is optimal in trying to track this universe and to unearth new ideas. Quant is a blend of machine and human intelligence. Human intelligence is critical in designing the model, but once the model is designed, the process is run as it should be in a systematic way, thereby eliminating human biases. By that, what I mean is that my views or my personal views on the stock or the sector will have very little bearing on the final portfolio. Axis Quant Fund's philosophy is to invest in a portfolio of quality stocks with good growth at reasonable prices. We call it QGARP. To do this, we evaluate all the stocks in our universe based on three main parameters, and we use a multi-factor approach to do the same. What we do is we evaluate based on quality of the company, the growth outlook, and the valuations. Companies that rank well on majority of these metrics tend to make it to the final portfolio. Given this unique way of stock selection, the final portfolio has limited overlap or commonality with traditional mutual funds, giving investors exposure to differentiated stocks and themes as part of their portfolio. The other highlight of the fund is that risk is integrated into the portfolio construction process. We look at risk in a holistic way, ranging from volatility of the stock to, let's say, the liquidity of the stock as well, which is why our portfolio has consistently had a lower beta and lower volatility compared to our benchmark. In fact, for instance, in 2023, when the portfolio outperformed the benchmark by a sizable margin, the majority of the outperformance came from the fact that we were able to control the downside in the markets during the first quarter last year, when markets fell by almost 8% due to global reasons. The fund is completely diversified from a sector perspective and has a flexi-like approach to cap allocation, wherein 50 to 80% of the portfolio can be allocated to large caps, whereas 30 to 40% is allocated to mid and small caps. This gives us the opportunity to look at investment ideas across large, mid, and small cap categories. The fund was launched in July of 2021 and it recently completed its third anniversary. The fund has been able to navigate the market's ups and downs pretty well and has delivered good returns through the cycle. Lastly, the fund is a risk-controlled and a differentiated offering for savvy investors who are looking to invest over a cycle. Given the diversified approach from a sector perspective and a flexi-like cap approach to portfolio construction, this is an additional option for investors looking to invest in a broader category of mutual funds like flexi-cap or mid-cap funds. Thank you.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.